Welcome to your weekly market update. We have big news with a mortgage bond rally. We are all the way back to July of the lowest interest rate. So everything we've been preaching this year is starting to come to fruition. There is forecasted 4 to 6 rate cuts by the Fed in 2024. If you're out looking for a home, your window is closing quickly to have any sort of negotiations, because when rates drop and an estimated 500,000 buyers per 1% in interest rate drop will come into our country, 1 million buyers per 1%. It's 500,000 per 0.5% drop in interest rate come into the market. Prices will skyrocket up. Sellers will stop negotiating. We are still near very low inventory levels all time within the real estate and housing market. So everything we wanted to see is happening. Friday, we have the big jobs report. I'll show you in a second ADP. There's two jobs report. There's ADP and there's BLS. BLS is the Bureau of Labor and Statistics. They throw a lot of adjusters and what I call BS into these numbers. ADP we find to be very accurate. So check out what the report came out at. Weakness, and we want weakness in the job market, not for our economy, but for inflation to come down. It has not come down because the job market has been strong. So there was an estimated 130,000 jobs that were supposed to be added in the month of November. That didn't happen. It was only 103. October was also revised lower. So they give estimates and then they give actuals. So October was revised down. Goods and producing, manufacturing jobs are down. That means there's cuts. Construction jobs are down. That's cut. Services are up, trade, transportation, and utilities. So what are a lot of the blue collar jobs, the hard hat wears, the people that build and run this country? In my opinion, those jobs are up. Utilities are up. Leisure and hospitality, which was cut by 10 million people during COVID, the big spike up in jobs was really, in my opinion, not a spike in jobs. It was just people going back to those jobs after the COVID restrictions were listed. That is coming to an end. Those jobs are not going up. Professional and service jobs are down. So what about wage inflation, meaning the wages that are paid going up? That's always going to happen a bit. But from this time last year, wages were going up 7.6%. That's now down to 5.6%. Job switchers, people changing jobs, usually make a little more because they go to a new job and they get paid more. That was 15% last year because the employment inventory of workers in certain jobs was low, so they had to pay more. That's way down to 8.3%. So yes, people's jobs are not as secure. Yes, people's wages aren't going up like they were. Yes, prices are still going up a little bit, but this is needed for rates to come down. This is needed long term for the economy to turn around. Inflation is coming down, and that is a great sign for housing in 2024. So buy the home now, get whatever's left in the window of negotiations, and refinance. We believe that will happen around June or July. The forecast is about 5% interest rates by the end of the year. We're thinking 5.5 to 6. We're seeing some rates in the higher 6s right now. So continue to be aggressive with your job search. Call us if we can do anything for you. DM me with any questions.